Yo, good morning. I thought I'd do something a little bit different with my trade reviews today. So I normally undertake the charts and stuff, but it does take me quite a long time in an evening to do all that. I'm not really, time's not something that I have a lot of at the moment. So I just thought maybe doing it on a video like this would be better actually. It probably gives me time, more opportunity to explain my thought process on my trades, as opposed to trying to write it on a chart. So we'll give it a go for a week, and obviously if anyone bothers to watch it, then maybe I'll keep doing it, and if no one watches them, then maybe I won't. So let's have a look at yesterday's trade. So not well, a good day for me in some respects, but not from a P&L point of view. So I took four tickers yesterday. I ended up break even on the day, so I took 4 losses on 3 stocks, and then 1 green trade on AMT, and that trade got me back to break even on the day before fees, which is good in a way. It shows that I'm obviously playing with a risk reward of 4 to 1 or better on my trades, which is good. Still a bit disappointed the trades I took didn't work out, because they were all good trades really. They were all okay, so I had no problems being red on the day, no problems at all if that's how it had ended. So let's take a look at the trades as they happened, and let's see what I could have done better or where it went wrong. So first trade was SIG. I got SIG off this scan here. This is down 3% in 10 minutes. I use this scan for finding stocks that drop fast in the first 10 minutes, and the theory is, and I've backtested this a lot, and it does work 8 times out of 10. When you get this big drop down here in the first 10 minutes or so, it finds its support for whatever reason, and then it makes a sharp retrace back up of at least 70% there. So what I'm looking for in this is I'm looking for it to retrace off either the VWAP, the moving average 50, or something else, and in this case it was the whole number. So if we just zoom in here a little bit so we can see what went on a bit better. So we get the drop, we get the retrace. It goes straight through the VWAP, which I thought it would, because the VWAP was actually quite low. It comes up to the moving average 50 here, goes through it, but we did have the whole number just above, so I marked up the number of the whole number of 35. It came up, and you can see there it just touched the 35. So let's just move that out of the way there. It tagged the 35 to the cent and rejected. So I got in. I was a little hesitant actually, and I got in at about 34.87, I think. So could have been better. I should have really taken it. Had maybe even had an order out at about 34.96, something like that, and been ready just to hit the stop if it blew through. But that's a learning thing for me. Maybe I need to put orders out instead of just waiting and then hesitating. So anyway, so I got filled 34.86, 87. It dropped back here. We got down to 34.40, so it was looking okay at that point. I didn't take any shares off. I was really looking for it to at least tag the VWAP before I took off half my shares. Made a little beeline back up again here. What I did is because I had other things that I was looking at, so I just set a hard stop at 35.05 at this point, and thought I'll let it do its thing, because as I'll show you on the daily chart, SIG is really on a big downtrend at the moment. It's come from sort of $70-80, and it's not looking good. At this point it had broken support, and it had very little to hold it up till about 31. So my theory was it would come here and it would slowly fade off down till probably lunchtime, and then create this slam play around here, because that's what usually happens on these. It tries to come back up, and it gets below the VWAP, and then it will try the VWAP, and then eventually it will come down, and it will create a slam play around 12 to 1 o'clock, and then it will die. And let's look at the daily chart, and I'll explain why I thought it would die. Because we've got no support. Well, in fact, we need to go to the weekly. It's got no support really there until 31. So it had plenty of room below, which is why I thought it would just drop and die away. But for some reason that didn't happen. It got bought up, as you can see. It got bought up here. Some buyers came in and pushed it back up. So it didn't work for me. So I took the loss, which was my first trade of the day. Took a small loss on that, which was a shame. But again, I'm glad I took the trade because they do work. They do work a lot. They work around about 76 to 78% of the time on this setup. So so that's that. That was SIG. That was my first trade of the day, first loss. Second trade of the day was FCAU. That came from the reversal scan. So FCAU, we need to go to the 5 minute and need to look at what I was looking at. So FCAU, if we remove those, I was looking at this candle here. Okay, so it made its way up here. We got this little candle here, and I thought, it didn't look too weak, but I thought it might fail here. So I did give it a go on this candle, risking off 21.18, and I got in as this body here just broke the body of that candle there, and I got in at the bottom of that candle at 21.11. I think I stopped out around 21.20, so I took a small loss on that there. And then, as you can see, it basically carried on up and up and up and up. I did take another trade on this here, and again that ended up being another small loss, which was really disappointing. So kept watching it because I knew it would top out at some point, and I actually expected it to sell off down to the VWAP at least during the afternoon. So you can see this area here, you get all these little doji candles. You know, we got a doji spinning top there, one there, one there. All lots of indecision in this area. So I thought, yep, and it's starting to make these slightly lower highs here. So I took a trade. I took a trade here, exactly there, as that candle there. I wonder if we can zoom in a little bit here. That's the wrong way, sorry. There we go. So as this candle here, this 5 minute candle, broke the support of those candles, I took it short at around, I think I got in around 21.67, 68, something like that. And it was actually started to look okay. My stop was always going to be, well, once I was up on the trade, my stop was break even on it. In hindsight, I should have given it a little bit more room. So we put a trend line in here, and it started to hold this. Started to hold this trend here. Okay, I did take some shares off around here. I took off, I think, half. But then I left it. I had to go out and pick up one of my children, and I left it to do its thing, and it stopped me out. Stopped me out somewhere up here. Which gave me, I think that gave me a break even pretty well on that trade, but with fees it did give me a small loss. I'm actually wondering if I got in there, to be honest, on that candle. Do you know what? I can't remember. It could have been that candle there, which is why with the stop there I took the small loss, because I think I locked in some there, but it was a really small lock in, and giving it to there turned the trade red on me. So that was the second trade on FCAU and the second red trade on it for me as well. So again, nothing big on it. No major loss. It didn't work out, but again, it gave me all the signals at the top there that it was going to reverse, and indeed it did reverse, and it dropped down. But I just find at the moment stocks aren't doing what you expect them to do. The reversals aren't working as well as they should, and VWAP rejections aren't working as well as they should, because a lot of these stocks are just following this SPY at the moment, especially the higher priced ones. You get up to $50-$60 stocks, and almost tick for tick you can guarantee a lot of them are following the SPY, which makes it really difficult to plan a trade out, because you get into the trade and it's looking good, and then all of a sudden you get a small pop in the SPY, and bang goes the trade, and it's so frustrating at the moment. So I'm thinking probably I'm going to start taking more profit earlier, to make sure that I'm at least locking in a profit on each trade, even if I stop out on the rest at break even, because to not lock in a green trade on something that works out is quite bad, really. So it's not a thing of greed, it's just how I wanted to trade. I want to trade really in a way where I'm taking off 50% of my shares and letting 50% ride. In the right market, that works really well, and it was working really well a few weeks ago even for me. Now all of a sudden it's not working so well, so I'm probably going to take off 3/4 of them at certain points, and then leave the last quarter to ride to either break even or high of day, and see how that goes. So that was FCAU. Didn't work out great, but again, I'm glad I took the trade, because the signals to take the trade were all there. So like I've said before, important that you understand what these candles mean. And that was a real nice topping formation there. It was very unlikely to carry on going up after those candles, so I'm glad I took it. Just a shame it didn't work out. The next one was TSM, and I got this one wrong, and I'm really disappointed in myself, because this is kind of a setup that I spoke to Pat about this setup about 3 months ago, when we were really working on the VWAP scans, and I noticed how strong this setup was of the double top over the VWAP. And we talked to Pat, and Pat said, yeah, it is a very strong, a very strong short usually, and he did a video on it. And so the fact that I didn't see this is quite annoying. So if we go over to the 1 minute chart for this, and zoom, and you can see I took TSM from the VWAP slab there. So I took it here. So it came into the VWAP there, and it started to reject. Okay, let's just zoom in a little bit on this. Okay, so it comes into VWAP, it fails at the VWAP, so I took it short. I took it short here at 43.55ish. Didn't get an awful lot of resolution off it, to be honest. It hardly dropped. I set a stop somewhere up here, and I thought, well, if it breaks, it breaks. I'm not going to hold on. So I took a loss. I took a loss on it. It was a failed VWAP. VWAP fail. But I should, and I'm not being a hindsight trader here, I should have kept watching it, because when it gets up to here and fails, and it comes back and tests this double top here, that's where I should have taken it. When it puts in this mini intraday double top after it's reclaimed the VWAP, and it fails to break here, that point there is exactly where I should have taken it short and risked taking it short around 43.67, risking off, maybe giving it 10-15 cents to the upside, and just left it, and that would have worked out as a decent little trade for me. So a bit annoyed that I didn't notice that. I think I just took my eye off it. It was another, second, third red trade of the day. Kind of like, oh well, that one hasn't worked out either. So, but definitely a lesson for me. Keep watching these. Don't give up on them straight away. You only have to keep watching them for 20 minutes. If it's going to fail after it breaks the VWAP, it will normally fail in the first 15 minutes. And that's exactly what it did. It just didn't get any higher there. So I must put more effort into keeping my concentration, really. That's me being critical of me on that one. It was quite a distracting day for me yesterday. I had my children here and that sort of thing, so I've got them for the next week now. Probably not going to get to trade much tomorrow and Friday. I'm off to visit my parents. I'll certainly be around the chat room just the same, but I'm not going to take my laptop with me and trade, I don't think. It's family time, and that comes first sometimes, so probably be my last trading day of the week today, so hopefully going to make it a good one. But anyways, that's TSM. So you can see the theory. Took it. Let's try and make sure we're clear about what we did. Took the trade there on the VWAP fail. Again, the idea is VWAP fail, it fades down, test this low of day here. This is the trade plan. Fails, comes down, tests low of day, breaks low of day, heads on down. That's the trade plan. It didn't work. That's okay. What happened here? What happened here is exactly what I was hoping was going to happen here, but it didn't quite work out for me. But nevertheless, again, glad I took the trade. It was a pretty strong looking setup. Nice retrace here into the VWAP. It didn't work, so we move on. And next trade I took was just a second. Okay, next trade and last trade I took was AMT. I actually wasn't going to take any more trades at this point. I think I'm done for the day. Probably have to call it a red day. However, AMT popped up on the reversal scan, so we'll go to the 5-minute chart. And I knew this was gonna. When I saw it, I just knew this is what it was gonna do. I've been looking at so many of these charts over Easter, hundreds and hundreds, and the one thing I've noticed is when you get this big rundown, and you get this candle break here, it's not a doji. You see, that's not a real. That's a doji there, but the doji fails. So, and that's. We've got that doji spinning top there, and that fails also. So this thing doesn't want to reverse. So when I got this candle here, I was watching it from here, and I saw this candle break here. You could have gone long. So we could have gone long here on the break of the body at 141.59, risking off 141.41. However, I just had a feeling, I knew I was right on this, that it would fail at the moving average 9. I just didn't get the feeling this was ready to pop back up. So I didn't take it long. I kind of should have done, because that's the strategy is to take it long on the break of those bodies, but I didn't. What I did do was just wait for it to come into the moving average 9. It obviously, that candle failed there. It closed at the high of the candle. It opened there and absolutely died at the 9. So I just watched it come down, and I took the trade exactly there at 141.46. That was my exact entry. 141.44 was my entry to the cent. I had an order. There was about a 9-10 cent spread, and I put an order in at 141.44, and it filled on the way down. And And to be honest, once it filled, it never tried to reverse on me. I don't think I was in the red at any point on the trade. I only took a few hundred shares on it. Wasn't feeling like I wanted to risk too much money as I was already red on the day. However, I had a feeling that this trade would probably put me somewhere back to being right, to be honest. So yeah, broke down straight through there. And I know someone in chat said playing low of day breaks is quite brave or quite risky, whatever. But to be honest, this isn't your standard low of day break. Okay, this isn't something that's come down, gone up, come down, and you're putting in that type of pattern. Well, that can be risky. This is just a plain old it's dying low of day break. It's never tried really to do anything other than go down. I don't like playing low of day breakdowns because they can fail really quickly. The only time I'll play it is if it's a proper slam play. However, this, just like I said, I've seen so many charts over the last week of this exact pattern from this exact scan. This is high odds. I am telling you, this is high odds that this is going to work. This is 80% or more. So there's no way I wasn't going to take it. So yeah, carried on down quite nicely. I took off half the shares at 141 on the whole dollar. Locked in my first profit there. That got me 3/4 of the way back to break even, maybe even closer. And then I took off the rest here. Okay, now the reason I covered around here was we need to look at the daily chart for this. Okay, we go on to this board here. So on the daily chart, you notice. Sorry, we need to go on to plain daily. Notice on the plain daily chart, it comes up to the moving average 200, and it tags the 200 to the cent. Look, so we got the moving average 200 at 140.50. It comes down, it touches the 200, and it rejects it, and that is why. Sorry, hang on. Yeah, so that's why I took my shares off there, because if we put a line at 140.50 there, it tags the moving average 200 there and rejects it. So I took my shares off just over it in anticipation of the bounce, and the bounce did indeed come there. So yeah, that was a nice little trade. I was really happy with that trade. Dead happy that I took it, actually, given the fact that I was red on the day. I think even a month ago, 6 weeks ago, I wouldn't have taken this trade, because I went through this horrible little period of being really frightened to take trades. I don't know where it came from. It's something I'll probably do a blog post about actually this weekend, because I went through some real nasty emotions over the last few months of just losing my confidence in myself and losing my ability to take trades. And if I was red on the day, if I was down $80, $100, $150 on the day, I would have walked away and called it a red day. But I've got that confidence has come back now, probably through extensive backtesting of a strategy. If you know something works 80% of the time, even if you're red on the day, I think you're doing yourself a disservice by not not taking the trade. So I think sometimes you just got to have confidence in the stats that you've kept and what you've done, and just say I'm going to go for it and take it. I didn't revenge trade in any way. I didn't use size. I didn't say, I'm going in with 500-600 shares on it. I just used the usual size on this size of stock, 200-300 shares, and let it work itself out. I was more than happy to take a loss. I would have held it from there. I would have held it to the high of this candle, because that's what I would have had to have done. It didn't put me in the position, fortunately. So yeah, I was really pleased with this trade. I wasn't expecting any more out of it, to be honest, knowing that the moving average 200 was down here. It was never going to be a home run trade. Home run trade would have been if you'd caught it up here, you'd have done nice out of it. So I was dead happy. It got me back to around break even on the day. that was my last trade of the day. This candle scan, yesterday it was a difficult one. Did give one or two proper reversals, but on some days when the market's really indecisive, you have to use it in a slightly different way. You have to understand when the difference between a reversal and a simple little blip in what is a downtrending stock. So that's something that, again, that I'll do some more work on to get people, so that you're able to identify the difference between joining trend and a hard reversal. The candles do tell a big story, the volume tells a big story. You see, if we were getting a big reversal here, I would have expected this volume bar here to be bigger. I would have expected it to be maybe up here, because without volume we're not going to get a big reversal. So that's normally a sign. You see here we got a little pop up here and we got a higher volume bar. Okay, we got a pop there and we got a high volume bar. So the fact that we didn't get a big volume bar here told me that this wasn't a reversal. It was simply a few, it probably short cover, to be honest. It could have been short cover. Popped it up, and then down we come again. So yeah, on the whole, all happy with the day. Hopefully make it another good day today, last trading day of the week for me. Hope you guys did okay. I hope that you've enjoyed the recap. If you prefer me just to do charts, then just tell me you'd rather have the annotated charts, and that's great. Okay, so I'll catch you in the trading room later. Thank you. Bye bye.